In today's fast-paced world of investment, betting against commercial real estate investment trusts, or REITs, may seem like a tempting strategy. But is it really? Let's dive into the world of short selling, specifically when it comes to REITs. Shorting REITs is a strategy where investors bet against the performance of these trusts. In essence, they're wagering that the value of the REITs will go down. But as with all investments, there's a degree of risk involved. In fact, the risks in shorting are arguably more substantial than in traditional investing. To understand the potential pitfalls, let's look at the case of Jim Chanos and Digital Realty. Chanos, a seasoned investor, took a short position on Digital Realty, believing that hyperscalers or large-scale infrastructure providers would disrupt the company's business. However, this thesis did not play out as he expected, illustrating the unpredictability and risk involved in shorting REITs. Beyond the inherent risk of betting against a company's performance, there are other potential hazards. These include potential losses that can be substantially more than the original investment if the REIT's value increases instead of decreases. Additionally, short sellers are also responsible for dividend payments, adding to the cost of this strategy. And let's not forget about the interest charges that can accumulate over time. Shorting REITs is not a strategy for the faint-hearted. It requires a keen understanding of the market, a tolerance for risk, and a readiness to absorb potential losses. As we can see, shorting REITs is a risky business. Now let's take a closer look at two specific REITs that have been shorted recently, SL Green Realty and Medical Properties Trust. SL Green Realty, Manhattan's largest owner of office buildings, has been on the shorting list. But what's the real story behind their numbers? Let's take a closer look at SL Green Realty's recent performance. The company's third quarter operating results showed a decrease in total revenues and funds from operations. On the surface, this may seem like a red flag, but it's essential to remember that numbers often tell only part of the story. Despite these dips, SL Green Realty has a robust portfolio that cannot be overlooked. As the largest owner of office buildings in Manhattan, they hold a significant piece of one of the world's most valuable real estate markets. This portfolio provides a solid foundation, ensuring SL Green's continued relevance in the real estate industry, even amidst fluctuating market conditions. Moreover, it's worth noting that the company is currently trading at a significant discount. This could present a unique opportunity for those willing to take a chance on this Manhattan giant. While the dip in revenues and funds from operations may seem disconcerting, these figures must be viewed in the broader context of the company's overall standing and potential for recovery. The real estate market, like any other, is fraught with ups and downs. SL Green Realty is no stranger to this reality. However, their strong portfolio, coupled with their significant presence in Manhattan, provides a level of stability that should not be overlooked. It's also crucial to remember that SL Green Realty, like many other companies, is navigating through unprecedented times. The challenges faced today may very well be the stepping stones to greater success tomorrow. Despite the challenges, SL Green Realty remains a force to be reckoned with in the Manhattan real estate market. Now let's switch gears and look at another shorted REIT, Medical Properties Trust. Medical Properties Trust, a healthcare REIT, is another company that has faced shorting. But how is it faring amidst these challenges? Let's delve into the details. The company has adopted a strategic approach to navigate the choppy waters of the financial world. It has been systematically divesting its assets. Now you might wonder, why would a company sell off its assets? Well, the goal here is quite clear: to reduce debt, and this move has indeed had a significant impact on the company's earnings. However, this isn't the only measure Medical Properties Trust has taken. It has also made a decision that might surprise some. They've cut their dividend. This is a bold move, and it's not without reason. The company aims to improve its balance sheet and liquidity through this action. Yes, it's true that cutting the dividend might not be the most popular decision. After all, dividends are often seen as a sign of a company's health and profitability. But let's not forget that every company's situation is unique. For Medical Properties Trust, this step is part of a broader strategy to ensure long-term stability and growth. So what does all this mean for the company? Well, it's clear that Medical Properties Trust is not sitting idle in the face of challenges. It's taking active steps to improve its financial standing and weather the storm. Despite the hurdles, Medical Properties Trust seems to be navigating the storm with strategic moves, but as always, the world of investment is a complex one. So, what's the takeaway from all this? As we've journeyed through the complexities of shorting REITs, two key cases have emerged: SL Green Realty and Medical Properties Trust. Despite experiencing challenges, these two entities stand strong, reminding us of the inherent risks and potential rewards of shorting REITs. Whether it's SL Green's solid portfolio or MPW's strategic asset divestment, each case underscores the importance of thorough research and analysis. Remember, in the world of investments, knowledge is power. Stay informed, stay ahead. Before we wrap up, we have a quick reminder for you. The world of investment is ever evolving, and staying updated is the key to making informed decisions. That's where we come in. Our channel is dedicated to bring you the most insightful content, just like the one you've watched today. So why wait? Hit the subscribe button and join our community of savvy investors. Don't miss out on the latest trends and insights in the investment world. Subscribe now and stay ahead of the curve.